In this video, I'm going to tell you everything that you need to know about the South African money market. Thanks for joining me. I am Yolanda, and on this channel, I give you easy, actionable tips, content, and strategies that you can use to manage your money well, build generational wealth, and live abundantly. So today we're talking about the money market, what's happening in South Africa, and how you, as an investor, can start maximizing this tool. First, let's understand what is the money market. Well, as you know it as a banking customer in the country, a money market is basically a deposit account that you use to deposit money. It's a very low volatility kind of account because you know beforehand what kind of return that you're going to get in terms of interest. Money market accounts usually offer low interest, and that is something that we've got to be careful of as investors because we always want our money to be working for us and not against us. And when we get a return that's less than inflation, we're actually losing money. While the digits in the account stay the same and the amount stays the same, the buying value of that money slowly diminishes over time because of inflation. So as financially savvy investors, we've got to always worry about our rate of return and factor in inflation as well. Money market accounts also give you easy access to your funds. So in a matter of seconds, literally depending on how fast your internet banking app works, you can get your funds out into your current account and do whatever transaction you need to do. Well, a money market account is great for short-term savings, such as holding your emergency fund or saving up, or a sinking fund where you're saving up for a significant purchase. For example, you want to buy a flat screen TV. A decent flat screen is about, 12,000 rands? And you want to save 2,000 rands a month, every month, and you're going to wait for a Black Friday deal to get yourself this TV, right? Because we don't want to be stuck in debt and swipe our credit card when we can now, but whereas we can save up, get some interest and use that towards our purchase. All right, so those kind of funds, sinking funds, we can hold in money market because of a higher interest rate than general savings account. But always shop around. Sometimes you could find a certain type of account at your bank that gives you a greater rate than money market, all right? All of the banks are different. They have very different products, very different rate of returns. And it also depends on the size of your money as well, the amount of your money. Because obviously with the banks, the larger your lump sum, the greater amount of return you could possibly get. Some accounts have a minimum of 100,000, for example, and they give you a higher rate of return. So the bank incentivizes you for holding more money in the bank, basically. And secondly, the function of a money market is a parking bay. Let's say you dispose of an asset. You sold some property, a luxury vehicle, some gold, some art, some jewelry, and you have the significant amount that you want to hold. Do you want to invest it or spend it somehow, but you don't want to take a rush decision. So you hold those funds in a money market account. It just parks there for a while, 30 days, 60 days, 90 days, and this is basically it. It's a parking bay while you take a decision as to where you're going to invest. So it's very, very temporary because of those low rates of return. Although guaranteed rates of return in a money market account, it's very low rates, sometimes it's barely touching inflation. So one thing that you got to know about with the money market is the difference between the money market account, which you and I have access to on our banking apps or our local branches, and the money market fund. Now, these are two very different beasts which need two very different strategies, and I'm going to explain that to you now. All right, so the money market account is a pure bank product. You invest your money in there and the bank pays you interest. And the bank does what banks do with your money after that. So the beauty of that is there's no risk. But remember, as investors, we got to know low risk, low reward, high risk, high reward. So obviously with the low amount of risk becomes the lower amount of return with your money market account with the banks. So the only time that can go wary or the risk can really rise is if the bank shuts down or liquidates. Hello VBS. So that kind of risk does still stand with the banks. And the thing with money market accounts with the bank, your investment is only with one bank. If you're with Standard Bank, it's only with Standard Bank. If you're with Absa, it's only with Absa. So you have all your eggs in one basket in that one money market account with one financial institution. You have money market funds. So this is the exciting one. So money market funds are actually listed products, listed on the Johannesburg Stock Exchange, and along with that comes all of the rigorous regulation that the asset manager has to do in terms of the rules of the country. Okay, so the money market funds are run by asset managers like Allan Gray, Coronation, Casico, Signia. Those are all asset managers, and they each have maybe 3 or 4 money market funds. So this kind of investment, the money market fund, is a higher risk investment, and it has a higher level of entry as well. With most banking apps, you can open a money market account with 100 or maybe 1,000. But each asset manager has their own entry point as to how much you can invest in their money market fund. So what strategies can you use with your money market account with your bank? So here's one I recommend to my clients who are saving up for their emergency fund. So let's say you need a 3-month emergency fund and your expenses for 1 month is 20,000 Rand. So your emergency fund for 3 months should cover 60,000 Rand. So instead of you every month saving money, okay, so you have money every month put away to cover 3 months worth of expenses. So instead of this sitting stagnant in a money market fund that pays you low amounts of interest, often lower than the rate of inflation, what happens over time? Over a year, if inflation is sitting at 5% and your money market is going 3%, this pot of money is diminishing 2% a year. So what I recommend to my clients to do is this. Take half of your emergency savings, so in this case 30,000 rands, and invest it with an asset manager. Okay. Obviously, you go through the investment process here and you reach to a point where you're investing higher risk investments that are more volatile, that have the potential to give you a greater amount of return. But now you have your emergency funds that have dropped by 50%. So every month you go and you try and top this amount up every month again that you're holding in your money market account. Eventually, when you reach your peak of 3 months at 60,000, you take another 50% and you add it to your more advanced investments. Okay, so it's just this one process that's allowing you to save via the money market and then invest a portion which has the potential to grow at a greater rate than inflation and to build wealth for you over time. The next way that you can use your money market account is via a process called phasing in. So usually when you invest, particularly in lump sums, you have the option to phase in. Phasing in allows you to enter the market at various points. So let's say you have 100,000 Rand to invest. So instead of entering the market, let's say the market is high. Instead of entering the market here, okay, you can phase in a portion. Let's say you can enter at 30% here. The market is all cyclic, so it's going to come down eventually. Enter another 30% here, another 30% here, and another 10% here. So you've entered the markets at 3 very different points. Okay, this brings a little bit of diversification. It gives your money an opportunity to work for you at different levels because you've entered the market at different levels. So here's the difference between the money market account. Market account, if you're holding your funds in a Standard Bank money market account, you're only in Standard Bank. That's it. But when you invest in a money market fund with an asset manager, that one fund, okay, it's a fund that they have that's listed. That fund will be investing a little bit in Standard Bank, a little bit in Nedbank, a little bit in ABSA, a little bit in Discovery, a little bit in RBM, maybe even some government bonds, I don't know. Okay, everyone is different. But when you invest in a money market fund, you're getting a cross-section of whatever this fund is investing in as opposed to this. And one of the biggest advantages of the fund is with your bank product, you're getting guaranteed interest. You know beforehand what you're going to get. However, with a money market fund, with an asset manager, you don't know the interest. You know you're going to get interest, low amounts of interest. You don't know the amount. You don't only have the opportunity to get an income with interest. You have an opportunity to appreciate. Remember, this is a listed fund, like a unit trust. A money market fund is basically a unit trust that's listed, and there's units in there. And let's say those units, you buy them in at 1 Rand each. So over time, we want those units to appreciate to 120, 130, eventually 140, 150. And when we sell in maybe 6, 7, 8 years' time, we want that appreciation to be up. For example, at 2 Rand. So we enter at 1 Rand, we sell at 2 Rand. That 1 Rand spread is our profit. Okay, so that's the appreciation but that we're getting as well in the money market fund. We're also getting interest every month on this. So there's 2 ways to get income with the money market fund. Appreciation in terms of the unit appreciation and the interest portion every month. With the money market account at the bank, you're only getting interest. And obviously, the various tax rules apply when it comes to interest. You have your limit there of, I think it's around 23,800 at the time of recording this video. So anything over that will be taxed. Whereas with money market funds, because it's a listed fund, when you sell those funds for a profit, you trigger capital gains tax. Okay, and that's the capital gains process. And also every month, depending on the amount of interest you get, you will be liable for that interest portion tax as well. All right, so that's what you need to know about money market funds. If you're ready to get invested in the various money market funds we have available in South Africa, reach out, click the link. Wherever you're watching this video, there's an appointment link in there, and we can be chatting one-on-one.